Good evening, ladies and gentlemen. This is QIHU, and in this segment, we're going to go over a whole bunch of charts on stocks that we trade, stocks that we'd like to trade, but mostly stocks that we trade and been doing well on. Alibaba. What can I say? We're in this stock all the way down at these levels. Okay, I wasn't down here at 82, but I certainly started picking up on it at this level. And look where we are today. This is one of the world's largest internet companies. Market cap on the stock right now, from what I can see, is 283 billion bucks, or 282 and 390 million. It's bigger than Walmart. Microsoft is at 401 billion, and Apple is at 639 billion, right? So I'm just looking at the market caps and saying this thing is fast moving. So one of the world's largest internet companies moves up literally from the 100 level that we're at just the other day to 114. It goes up 15%. What do you think is going on here? That these guys are just going gangbusters on their numbers and such? This was the breakout at 100. And let me draw something here which might shed some light. So I draw the Fibonacci here. This could be a Fibonacci extension play. And I could say that we broke out at these levels. Okay, at these levels. If you look at it, this was the high before. 100.1, excuse me, I'm tired. And then this massive acceleration phase. So it's well beyond the 161 extension. And what's the next extension on the thing? Wow, the next extension is the 423 fib, and that's all the way up at 157. Is it possible? It sure is, believe me. Great company. I don't know, I know the fundamentals, and I know they're growing very well. Clean balance sheet, high margins, and here's the real reason. Fund managers are desperate to show this company in their books. It's plain and simple. That's simple. Okay, there's a lot of fund managers who thought the stock was going to just basically settle down and go down way lower, and it did. I'm one of the first ones who said that it was going to go down to low 80s. It's there on print. It did, right? So what do you think a lot of these hedge funds and fund managers, they piled in at 80? No, they didn't. They sat around twiddling their thumbs thinking it's going to go to the 70s. What was the IPO price? 65? Well, guess what? It never went there. So then they started chasing. So therein lies the clueless 8 early warning. I mean, not early warning, the early entries. Okay, so let me get that. If I remember, my memory serves me correct, we were at this level here, and we kept on, kept on showing the channel. It went to the channel, buy the lower channel, sell the upper channel. Then it just had this falling wedge, okay, right there. And then bang. So this part of the move, personally, I missed out. Yeah, the last of the sells was around here. Does that make me feel like crap? Yeah, a little bit. But then at the same time, doing very well in a lot of the other picks. Okay, don't have to remind anyone about EOG. So the bottom line is that Alibaba at this point, do I think it's stretched? Sure is. Do you think the market cares? No. I think the stock can go probably to 8, if you look at it from a standpoint of a breakout, this stock could go to 120. This is a bull flag, whichever way you slice it or dice it. And do slice it or dice it, okay? This is a bull flag. Teaching a lot of the new members and stuff what a bull flag looks like. You haven't seen one? Still living in the bunker? Well, this is a bull flag, okay? This thing is going higher. Now, can it come down and test this breakout of this channel at 113? Sure it can. Probably going to do it for 3 minutes. Again, let's not get too over jubilant about Mr. Jack Ma and what they're doing, but I'm just showing you the stock is on a breakout move primarily because a lot of mutual funds, primarily, and pension funds actually, who never got into the stock previously, want to show the stock in their books. That's it. And this is an hourly chart. Let's take a look at YOKU. Now here's something very important that I want to mention, which I'm going to put the link up there. Finally, the Chinese government has announced that on November 17th, that's a week from this Monday, okay, November 17th, the Shanghai Stock Exchange is going to be fully connected to the Hang Seng, to the Hong Kong Stock Exchange. That means mainland Chinese will be allowed to buy, and I heard a number, it was staggering. The Chinese market is apparently 4.2 trillion. 4.2 frigging trillion dollars? The market cap of Chinese companies in mainland China on the Shanghai and Shenzhen exchanges, the CSI and the Shenzhen exchange, two of the largest exchanges in China. So you're telling me that a good chunk of that will be interlisted with Hang Seng. What does that mean to the to fund managers out there? They don't have to fight tooth and nail to get into and have to go through the complicated process of buying a Chinese security on the mainland China. They can actually buy it on the Hong Kong exchange, the Hang Seng, starting November 17th. Not all of them, but a good portion of them. What does that mean for the ones that are listed on the Shanghai exchange that are now going to be freely trading on the Hong Kong exchange, and for mainland Chinese to buy and for foreign money to buy? This is an exciting development. Let me give you a couple of names. YOKU. Alright? Always rumored to be, well, this is Chinese YouTube, rumored to be a buyout by Alibaba, because Alibaba has a nice stake in it or something, right? Do your own due diligence. I'm a technical chartist. I'm not a fundamental analyst here. Bottom line is, this is what I see. This stock most probably goes to $30. Here's the 50 fib. Here's the 50 fib. I'm going to focus on Chinese stocks today, okay? $27. That's a decent sum of money. These calls were running around, when I started saying buy it, they were running around 45 cents, whatever. They were at 90 cents, so that's a double, 100% on the money so far. Let's all wake up a little bit. 24.50. Once it breaks that, see you later. Has it broken the downtrend? Just look at this line. It's broken the downtrend. End of story. That's YOKU. Let's take a look at VIPS, one of my favorites. I love this chart. I was in VIPS a long time ago, back and forth. Then I missed the last leg of the big move up. Now I like it. It's split 10-1. Options are affordable. They don't have a spread wide as the Yangtze River. You can actually buy them with a decent spread where you can, get a good price. So what does this chart looks like? I'll tell you what this chart looks like. Single stage, China, Shanghai connection with Hang Seng. This means that I believe the stock goes to 26. I believe it goes like this. Okay? You need to draw any squiggles here. The downside is goes to 22. I'll be buying. Get down here, I'll be buying. Anything lower, I'll be buying. This is a high growth momentum stock in a market of billions of people selling into all these the Pradas and the Guccis and the Armanis at cheaper prices, having flash sales. Do your own due dilly. Look up on these guys. Fast growing. Somebody wrote analysis on stock price. Very amazing. They're based at 4 billion versus Alibaba, which is based at what billion? I totally forgot right now. No, I didn't forget. 283 billion. So VIPS, which is growing at double the size of thing, is market cap is 1.2 billion. Bottom line is, this ain't no Alibaba, but this certainly can move higher, and fund managers want it. So expect this to move fast and furious. I've already mentioned the parameters on which ones to buy. Buy in the money calls going November, December. Let's not get too jiggy. Let's see one thing at a time. But this thing, I think, is moving. Let's take a look at Baidu. My son is in third year Mandarin. I am not. So He can probably read Baidu's annual reports and their earnings releases. I can. Where's Baidu? I don't see Baidu here, so let me put Baidu on top of this. So VIPS looking good. 1 second. Okay, Baidu, one of my biggest winners this over the past couple of months. People know very well how I bought aggressively into the abyss right after the earnings. I called it before the earnings, and look where it is today. So Baidu is doing this here. If you want to do a simple thing, channel breakout was the width of this channel is 232 and 208. Do the math. That's 24 points. So add 24 to 232. What do you come at? You come at 256. So 256 is right up here, and I think that's where it's gonna go. Now let me draw a line and look where it's taking you. It's taking you to the same zone that I just told you. It's not magic how charting works. Okay, so the stock, where is this is the Bollinger Band. Let's add the acceleration bands. And the acceleration band is, let me change the color so we can see it. Okay, perfect. So let me make it yellow. Okay, so here we are. We're looking at this is on a daily. It's clearly showing that it's going between 242 and 249, and my measurement takes me to 256. Let's take a look at the weekly. The weekly is telling us that it's going to around 252, possibly higher. And look what happened here on the weekly, and this is big. These little Lego bars, right? Guess what? Just went green. There's a lot of stuff going on here. We got a seasonal factor. We got China Singles Day coming up on the 11th. You got these Chinese APEC Summit. Very important thing. APEC Summit going on right now in China. China is in focus. It's all about China. So for now, let's respect what their markets are doing and their stocks are doing. All right. So that's kind of. Let's bring out another Chinese stock. And that is QIHU. Let's see if I have time for this. QIHU has been a laggard, so this is one thing this is one that I would be looking at, because I like laggards. It's been my strongest thing. Buy distressed property. We explained this in the other video. Like oil and gas, you know that. Okay, so this one, for example, wouldn't be surprised if it comes up and tests 87. It's at 71. It's a decent move on a weekly basis, mind you. So daily is looking better. Let's take this arrow out. I would say that once it crosses over this stuff, this thing is going to fill this gap up here, and this gap is, this would be very exciting. This gap here would be 96. Well, that's asking quite a bit, right? But then I've done a lot of this stuff before for people who know. So what I would say is this baby, now that it's broken out of this falling wedge, okay, it's only broken out, can at least come back and test the 87 level. We're going to play this one. QIHU. Let's take a look at YY. Don't know much about these companies, by the way. So let's look at YY Incorporated. YY Incorporated daily looks like crap, to be honest with you. But let's take a look at the hourly chart. Hourly chart is showing, and again, this is where complicated chart, basic falling wedge type of stuff comes in. Very sharp, and I like it. I haven't really traded this stock, but I'm going to start to take a good look at it now that China's very much in focus. Okay, and do read up on the articles, links that I put in, and on your own. So this one, if it breaks out, we do have the 50 rising. I only have 50 seconds here. This one could move up to about 81,